against Nvidia. Let's bring in our panel. Lucas Kay is with us, semiconductor analyst at Third Bridge, and Ryan Sherwood, Futurum's president at Signal 65. Thank you both for being with us. So Lucas, look, we had the big acquisition this week from AMD of ZT Systems, and that was a big deal because that will help them to sort of really try to catch up to Nvidia, but Nvidia is still growing too. Some of your thoughts?
And I think you put it great. I think it's a good attempt in trying to catch up. Obviously, as you mentioned, they are still quite behind the market leader, Nvidia. But we're seeing AMD make the necessary investments in both their AI software ecosystem, as well as now kind of taking a recognition that the industry is moving more towards a system-level approach. Therefore, targeting a company like ZT Systems, which some might say is a bit unexpected, but it's certainly a step in the right direction.
Hold on to your stock portfolios, folks, because we're uncovering a seismic shift in the investment landscape that has billionaire investors shaking up their strategies in ways that might leave you shell-shocked. While everyone was glued to the July inflation report, perhaps the real story slipped under the radar, the sort of news that could fittingly be dubbed the most important data release of the quarter. On August 14th, the filing date for institutional investors to report their Form 13F disclosures to the SEC arrived, offering a rare glimpse into the minds and maneuvers of Wall Street's most illustrious money managers. Despite these reports being snapshots up to 45 days old when filed, they serve as crucial barometers, shedding light on the stocks, sectors, and trends, artificial intelligence, that are currently turning heads among elite investors. What might catch your attention most vigorously is the curious case of Nvidia. Yes, Nvidia, the semiconductor leviathan darling that's been synonymous with AI emergence. Why are billionaire investors fervently selling Nvidia shares, and what are they buying instead? Strap in as we delve into the labyrinthine choices of these financial titans and unearth the future market darlings post-Nvidia. But before we go through it, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Yeah, understood. Ryan, how do you feel?
I think the acquisition that they announced for ZT is maybe less about competing directly with NVIDIA and more about helping them continue down their path of kind of this open ecosystem approach, but still trying to get into that verticalized market, right? What NVIDIA has done to perfection is own everything from the chip to the infrastructure to the deployment in many instances. AMD tends to be more on the side of working with partners and kind of close partnership relationships to get some of that done. It's less expensive, it's less risky on their part. But what ZT does for them, it allows them to go one step further than just deploying chips, and now they can offer kind of white box system options for a lot of their partners. And I think they're still adamant, and Lisa has said this during some of her interviews yesterday, that they don't want to step on partners' toes in the process.
First, let's dissect this Nvidia conundrum. It's hardly surprising that a stock with a meteoric rise of over 700% since the beginning of 2023 would attract profit-taking. I mean, who wouldn't want to cash in a cool $2.7 trillion increase in market value, right? It's like buying the golden goose and then flipping it for a unicorn. But why, you may ask, has Nvidia been booted from billionaire portfolios not just once, but for the third consecutive quarter? This isn't just a fluke. It seems more like a carefully deliberated strategy. A hint lies in historical patterns. New game-changing tech often rides an initial wave of fervent enthusiasm, only to face a cruel market correction. There's an unforgiving reality to investing in the next big thing. Innovations rarely avoid those early-stage bubbles, and investors consistently inflate expectations around adoption speed and maturity timelines. Even for Nvidia with its alluring AI-enabled GPUs, the competition is fierce. Its rivals, potentially delivering similar computing power at a friendlier price point, are waiting in the wings. Plus, Nvidia's own hiccups, such as delays linked to the next-generation Blackwell platform, reveal it to be fallible, just like any other high flyer. As billionaire investors appear to agree, better bag the winnings now rather than risk falling behind with a lagging horse. But if Nvidia isn't the apple of billionaire eyes anymore, then what is? Enter Pinterest, the visual discovery and bookmarking platform captivating both users and investors alike. Interestingly, while some are waving Nvidia goodbye, 4 billionaire investors have significantly boosted their Pinterest stakes. But that's not all of it, so let's keep rolling. Hello everyone and welcome back to Investocracy.
Ryan, when you think about the competitive landscape, and we're looking at how AMD is handling all of this, some of your thoughts about some of the other players. Are they the up-and-comers that we're not really focusing on enough?
I think there probably are some. AMD is still very clearly a number 2 in the GPU space. GPUs tend to be what we think about when we talk about AI performance and AI infrastructure capabilities. Intel still has a role to play here. They've obviously had a lot of kind of downward trajectory over the last several years. They need to do they have some work to clean up on that, but their Gaudi infrastructure could be a credible third player here. They have some benefits in terms of performance per watt, and power we know is a really critical part of any discussion of AI infrastructure. I also think, if you look at the custom silicon from Microsoft or Amazon or Google, right, all these kind of custom AI infrastructure that they're building is an interesting part of the equation as well. How much they're willing to invest themselves and kind of design their own silicon, continue to iterate on it, and compete against the likes of Nvidia, AMD, and Intel, I think is going to be a really interesting kind of 12-month story to watch.
You might wonder, why Pinterest? Here's where it gets intriguing. Despite looming concerns over ad spending and a potential US recession, Pinterest sits pretty with compelling long-term potential. It is an ad-driven platform in a world where the economy is more often expanding than contracting. Yes, recessions may pop by as unwelcome houseguests do, but they seldom overstay their welcome. This cyclical resilience makes ad platforms like Pinterest long-term winners. One can't ignore Pinterest's increasing monthly active users, MAUs. With a growing and engaged audience of 522 million, businesses are willing to dole out premium rates to reach them. Take the June quarter, for example. A 21% year-over-year increase in sales signals a thriving ecosystem, even amid potential macroeconomic headwinds. And here's where Pinterest's secret sauce comes into play. Its unique ability to help merchants target audiences. Unlike many social media counterparts relying heavily on invasive data tracking tools, Pinterest thrives on user-volunteered information. When users freely share what interests them, Pinterest can serve up this valuable data to businesses, sidestepping the data privacy shifts and shaking up other ad platforms. Pivot now to another burgeoning favorite among billionaires, Intuitive Surgical. Known for its dominating presence in robotic-assisted surgical systems, Intuitive Surgical's allure is twofold: market share heft and a resilient business model. By the end of June, Intuitive Surgical had a staggering 9,203 of its Da Vinci systems installed across the globe. Given the hefty price tag, ranging from $500,000 to $2.5 million, and the investment in surgeon training, clients show a sticky loyalty to Intuitive's systems. But it's not just the sticker price of these systems that's enticing. Intuitive Surgical's razor and blades model ensures recurring revenue streams post-installation. The bulk of its profits flow from selling high-margin instruments used per procedure and charging for regular system maintenance. Such a model affords Intuitive Surgical a dual advantage: secure initial sales and a steady, lucrative annuity-like income thereafter. A forward price-to-earnings (PE) ratio of 63 and a rather modest Wall Street forecast of 14% annual earnings growth imply that there's not much room to falter. Nonetheless, the faith expressed by billionaire investors suggests that its intrinsic growth opportunities and defensive prowess outweigh the premium price tag. Given these revelations, one might cheekily ask, is Nvidia the next Titanic in Wi-Fi shorts? Or can these timely maneuvers lead to smooth sailing? Regardless, billionaire actions offer a compelling narrative and plenty of food for thought. So, where does this leave you? Armed with the insights that even billionaire investors are actively shifting from Nvidia towards more promising pastures like Pinterest and Intuitive Surgical, it's clear the winds of change are blowing strong. Currently, Nvidia stands at a fascinating crossroads. It embodies breathtaking growth and pioneering technology, yet faces substantial competitive and operational challenges. But before going through it, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
But I just want to point out that We talked this weekend about what time I get up. The absurdity by what thinks I get up at 4:30. You kidding me? I get up at 4:15. I got to get the jump on all the bad guys. But one thing that was very clear was Nvidia was down $1.70. Now, since this, what's come out at 6 a.m. was Lisa Su's somewhat competitive acquisition of a company, ZT. We'll get into it, but the stock, Nvidia, then goes up. So Nvidia is a true oddity. It had a huge week last week. And I'm kind of hoping, as someone who's owned it forever for my Chapter Plus, I don't want to come in hot. You want to come in cold. But this thing is its own animal. And there are people who are doing this work which just say it's very cheap.
Given the notoriously fickle nature of tech bubbles, Nvidia presents both immense opportunities and significant risks. Some analysts project its growth will stabilize, albeit at a somewhat moderated pace. Pinterest, now adorned with growing investor endorsement, continues to capitalize on its burgeoning user base and unique data model. Intuitive Surgical similarly holds its ground, banking on its superior market share and resilient revenue structures despite its lofty valuation. The numbers don't lie. Pinterest's 522 million MAUs speak volumes, and Intuitive Surgical's expanding installed base, underscored by recurring high-margin sales, paints a promising picture. Maybe it's time to reflect on whether your portfolio aligns with these evolving trends. And now, dear viewer, we close with a poignant question. What's your take on these seismic shifts? Are you ready to reallocate based on these fresh billionaire insights, or will you hold on to what's been tried and true? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.